Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Kelvin Wong, market strategist at CMC Markets, is our guest today. Kelvin, good afternoon.
Hey, good afternoon, Brian, and good to see you again.
Yeah, Kelvin, before we get your insights, we're going to talk a little bit first on Bitcoin, which is at 30,106.7. It's up 2.75%. Ethereum is at 2007.02. It's up 0.98%. Now, looking across to regional stock markets, we've got the SGX, which is down 0.2%. The KLSE is up 0.2%. Shanghai is up 0.76%. The ASX All Ordinaries is up 0.53%. The Nikkei bucks the trend. It's down 0.05%. The Hang Seng is up 0.71%. And rounding up the numbers, we've got the Kospi, which is up 0.74%. Now, Kelvin, relatively positive across the region. Tell us why.
Yeah, because one of the reasons, if you could look at it over here, is it could be kind of a bit of positive effect from the US stock market because over last night, the US stock market kind of managed to trim its intraday losses. So at the end of the day, it ended not so badly. It started the initial start of the first 2 hours of the session where there was actually more bloodbath. So, but what's interesting over here in the US stock market, not all stocks actually went up. So in fact, there are certain portion of the stocks in the US market are in fact right now in a bearish territory. So let me share with you all a chart. Okay, so basically this chart, right, is the 11 key S&P sectors, which is part of the S&P 500. So I know the S&P 500 is considered as a global proxy for the performance of global equities. So this is the year-to-date performance. So what's startlingly over here is at the top, this is the energy related stocks. They're actually up 47%. Mine is 47%.
Yeah, so it's a very clear outperformance from the rest of the market.
Yes. So it's very clear even before we reach the second half of the year, it's really up double digit and it's 47%. All thanks to a very resilient oil prices, and as well as a kind of a more high dividend payout from these energy related stocks. But unfortunately, the energy stocks itself or the component only form less than 15 or less than 10% of the S&P 500, which in turn global portfolio managers do not assign such a huge weightage towards these energy stocks. So in fact, the heavy weightage of them comes from your technology sector, your communication services, as well as your consumer discretionary. So all these three are already in bear market since the start of the year. It's been trending downwards. So definitely it's being hard hit by what I call global liquidity tightening condition engineered by global central banks. And
now, Kelvin, I want to stop you there. The outlier that seems to be the worst performing is consumer discretionary, which is down 34.5%. What are some of the component stocks that comprise consumer discretionary?
So the key thing is that consumer discretionary is not your typical bricks and we call it mortar and bricks consumer stores or retail stores. It's actually the two biggest, which right is one of them is in fact a considered as a big tech US big tech stock, which is Amazon, because they are considered as an online retailer. So that branches under consumer discretionary, and on hand will be automobiles, which is Tesla. So both of these two stocks are pretty hit very badly since the start of this year. So that actually explains this skewness towards this underperformance of this consumer discretionary. So if we take these two stocks out of the consumer discretionary sector, their losses will be definitely much lesser as per se. Yeah.
Okay, and looking across again, some of the other, obviously communication services and information technology are particularly hard hit. And obviously in the last 2 days, the announcement by Snap that basically shook the market. Could you just kind of highlight to us what that's all about, and what do you think the impact is for a longer term?
Yeah, so what we could see for sure that over here is that in the last, in fact, 5 years or so, consumer, because this big tech, I will talk about technology stocks, which comprises of technology, the XLK and the XLC, which is the communication services sector. All these have kind of being attached to very overly priced high valuation because of their growth status. And most importantly over here is that because due to what I call abundance of liquidity that is sloshing around in the global financial market space. That's why this particular highly growth stock, but with very highly rich valuation, able to actually outperform the market in the last 5 years. But unfortunately, what we see now, times has changed. So what we could see now, definitely inflation is getting pretty much persistent. I mean, we're talking about sticky inflation, and definitely the Fed itself over here, or even central banks, what their aim right now is not to actually have a put or they call it a central bank put to actually rescue the stock market, but rather rescue the real economy from facing what I call a very persistent inflation that may last longer than expected.
Okay, Kelvin, but on the other side of the equation, there's some positive observations that indicate that the current decline in global stock indices is almost at a tipping point that is setting the stage for a corrective rally, and also
Yes, yes.
obviously on the weakness of the dollars. Could you shed some light on that, and do you
Sure,
agree
sure.
with that point of view?
Sure. So before we share the chart base, I'd like to actually highlight over here is that it's just a stabilization of this major downtrend. So in terms of you look at the fundamentals, you look at intermarket analysis from the oil price, for inflation expectation, we do not see what I call a major bottoming process yet. At best, perhaps only a 1 to 3 weeks of corrective rally for global stock indices. So first up, right, let's take a look at one of the FX. The FX market will always tend to be a leading factor. So what's interesting over here is that this is the Chinese yuan. So it's a dollar versus the offshore yuan. So if you look at since April, late April, we start to see a strong dollar strength against CNH. They may be talking about yuan weakness, Chinese yuan weakness. So that is actually the driver, in fact, to actually we call faces a risk-off scenario or risk-off behavior in risk asset where global equities got hit as well concurrently. But what's interesting over here is that since the middle of this month, which is mid-May, it actually started to do a retracement. And now it's still showing a bit of signs to further push down towards this, which is support zone here at 6.6 and 6.5 thereabout. So what we could see over here is that if the dollar strength continues to actually weaken, it could add a bit of a consolidation for global stock market to actually shape that corrective rally, given its strong indirect correlation that it has with the global stock market. So very quickly, right, a very similar observation can be seen in the broad-based dollar index as well, which definitely does not include the offshore yen. So the heavy weightage over here is the euro dollar, then followed by the Japanese yen, then you have the Swiss franc and the sterling pound. So it's also shaping this ongoing, what I call it, medium-term pullback. So right now it's coming very close to the 50-day moving average, which is a support at 190, 100.9. So a breakdown below this level could take us down lower to 99 and 97. So that also boils down to further dollar weakness. We could add as what I call it a bit of positive, at least in the 1 to 3 weeks perspective for the US, for the global stock market to shape that corrective rally. Then lastly, very quickly, I'll share with you all the technical chart of the SPX 500, which I believe that most of you are watching very closely. So what we could see right now, right, is in fact last week it tested our medium-term support, the upper boundary of the medium-term support at 38.40. The lower boundary will be 37.20. So based on a Elliott wave approach or the fractal analysis approach, we may see a bit of residual push down to complete this impulsive down move bracket 3, which is at 37.20. So I'm watching very closely this 37.20 level. So this level, right, could be a level that actually induce potentially this 1 to 3 weeks of corrective rally. At most maximum, it could potentially bring us up to the next resistance level, which is the we call it this overlap of the 7th of March swing low area and this pullback resistance at 41.40 level.
Now, Kelvin, as always, thank you very much for your insights and for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Thank you very much for tuning in.